The S&P 500 went back up over the 2000 level. I mean, this is a pretty significant move. We've seen a record rebound in both the magnitude of the bounce off of the early August lows and also the kind of the evenness of it. We haven't seen any really significant pullbacks. It's been a nice, easy rise. And investors are really showing a lot of signs of confidence if you look at the areas of the market that are leading the way higher. We've seen a really big rotation this month away from kind of the more defensive areas of the market like utilities and healthcare into really very cyclical, very aggressive areas of the market that are sensitive to the economic trends. So we're talking about sectors like biotechnology, the financials. These are areas, industrial stocks is another one. These are areas of the market that have been really leading the charge higher as investors are really kind of scrambling to get maximum exposure to the market's rise. So investors have been looking at a couple of catalysts to really drive their enthusiasm we've seen over the last couple of weeks. Number one has been a simmering of the geopolitical tensions in the Ukraine and Iraq, but also it's been kind of a scaling back of fears that the Federal Reserve was going to start raising interest rates a little bit sooner than they expected. We've seen the economic data kind of slow down a little bit in terms of inflationary pressures have cooled. The job market, while still strong, showed a slight increase in the unemployment rate as folks move back into the workforce. That's kind of taking some of the pressure off the more dovish members at the Fed. And really kind of supporting their case that there remains a lot of slack in the labor market and that they should be in no hurry to raise short-term interest rates until the back half of 2015. And so the combination of those two things have really been driving the market up to new record highs and really looks set to continue for the next few weeks.